Hey, this is Matt from InvestiQuant. Today is Thursday, August 12, 2021. Yesterday, we saw the markets make new highs once again. So in the middle of the week, yesterday being a Wednesday, we printed all-time highs, which means we are at the highs of the week as well as every other time frame looking back beyond that. So what we're going to be looking at this morning is what has happened when you make a new high on Wednesday, at least for the week and for a smaller look back period. So let me go ahead and set this up. I'll show you exactly how we're going to do it using Discover. We're going to have all four instruments included. The setup's based upon entering the market long at 9:30 a.m. Eastern Time and exiting at 4:15 p.m. Eastern Time. Now, currently, the markets are pushing higher in the overnight session. So I'm going to go into the opening filters, and I'm going to say that the gap direction for this study is a gap up, which just means that the opening price is above the prior session closing price. Next, I'm going to go into the price patterns, and this is where I'm going to add the context around making new highs for the week and for at least a small look-back period. And to do that, I'm going to simply use the prior session was a 5-day high close. So I'm going to go to the new highs section here, and I'm going to hit day after 5-day high close. Next, I'm going to go into the indicators section. I'm going to put us in a bull market environment, which is above a 10 and above a 200-day simple moving average. And then lastly, I'm going to go into the calendar library, and I'm going to say that today is Thursday specifically, and this will mean, Wednesday was the day. The middle of the week is where we're making these new 5-day highs. So let me do that and then hit view results. And here we go. These are the results based upon entering the market long at 9:30 a.m. Eastern Time, exiting at 4:15 p.m. Eastern Time when it is a Thursday and you are gapping up when the prior day closed at a 5-day high close and above a 10 and 200-day simple moving average. Historically, we've got 126 samples to look at here in the S&P. We've got 145 in the NASDAQ, 129 in the Dow, and 112 in the Russell. And the win rates on these are similar on 3 of the 4. So for the S&P, it's coming in at 61%. That's also the case for the Dow. The NASDAQ's coming in at 60%. The Russell's the only one that's a little bit different, coming in at 52%. So it's a bit more neutral compared to the others, which are favoring the long side historically. If we look at the average win and average loss, they're very similar in size for the S&P. They're very similar in size for the NASDAQ and for the Dow as well. The Russell, the average win is just a touch larger than the average loss. But for the NASDAQ, S&P, and Dow, it's all very similar stats there on the win rate and the average win and average loss ratios. So historically speaking, this pattern has been a little bit more favorable to the long side. So hopefully you found that helpful. Good luck today, and we will see you next time.